this confirmation entry that I use to enter my trades. So guys, first I would like to introduce my strategy to you. I trade SMC concept, which is smart money concept, where I use demand and supply. I do top-down analysis. I use market structure and trend. I use efficiency and inefficiency zones. I use liquidity. I use confirmation entries and time frame alignment. That's how I trade. So first, let's do a top-down analysis from the 1 hour time frame to where I actually found a trade. So here we can see that the market is trending up. So according to market structure, there's an uptrend. Why? Because it is creating higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Okay. So we are in an uptrend. Why? Because the market is trending up and it is creating higher highs and higher lows. That's the reason why we are in an uptrend. When the market is creating lower lows and lower highs, that is also a downtrend. Okay. So in this case, we are in a clear uptrend. So the market is trending up. So let's play the market forward to see where we can get the tree. So we've broke through the structure, which is leading us to lows. Okay. So if we are taking this current price action into consideration, let's take this price action into consideration. So this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a lower low. Why? We had a break of structure. This is a lower low, this is a lower high, this is a lower low, this is a lower high, and we've not created any lower low yet. So from year to year, we can see the market is also trending down. Why? Because we had a break of structure here. So a candle break of structure leading us to a market shift. So the market shifts and from an uptrend to a downtrend. Okay, to a downtrend. So we had a 1 hour break of structure here, leading us to a downtrend, making this a lower low, making this a lower high, making this a lower low, and this a lower high. Okay, so this is our current price action. Currently, we are trending down, and we have this demand zone for a buy. What are demand and supply zone? So demand zone is where buyers look for cheap prices to buy, and supply zone is where sellers sell at premium prices to gain more profit. So buyers are willing to buy low, which is the demand, and sellers are willing to sell at higher prices to gain more profit. Market participants buy at lower prices and sell at higher prices for more profits. So everybody wants to buy at a lower price, and everybody wants to sell when the profit gets higher. So that's the general meaning for demand and supply. That's what. So we are looking for this lower price in this structure. We are looking for this lower price to buy and take the market high to get a good sell and make a good return on our buy. So let's play the market forward and see how the trade actually went. So from here we can clearly see that we are consolidating a bit. Why am I saying that? This is a high and this is a low. There is no break of structure yet. The trend only continues when we break the structure. We break it from below or we break it from above, either the high or the low. So that will determine whether the trend is continuing or the trend is changing. I mean, it will help us determine whether we are having a market shift again or the trend is continuing downs. So let's play the market forward. So in this zone, we can see that price is consolidating a bit. So I would like to move to the 30 minutes zone to see if I can find a trade, because in this consolidation, we can also get a trend in the 30 minutes time frame. The market is trending higher high, created this low, making this a lower low, lower high, a lower low, low high, a lower low, a lower high, a lower low, and a break of structure, leading us to a new uptrend, which is higher high, higher low, higher high, higher low, higher high, and higher low. So we have trend in trends. Okay, we have trend in trends, whereby every time frame has its own trend. So that's how it is. When you zoom in into the time frames, you can see that 15 minutes have its own trend, 30 minutes has its own trend, and that's how it is. So in the 30 minutes time frame, you can see that here we are trending up. So let's zoom into the 15 minutes time frame if we can see a trade, because here we can see that we are quite efficient. There is an efficiency here. Prices are not filled yet, but this is the last zone before the kickoff. So this is where the actual demand zone is. Why? Because we have more buyers here. So I would love to buy from the low demand than inducement. Inducement is whereby buyers or sellers are figured out and price actually reaches a natural demand zone for buyers to tap in and induce the first buyers or the first sellers who enter the market impulsively. And due to that, they lose their money and the real buyers gain profits. That's how that general idea about inducement. That's all. So digging down to the 15 minutes time frame, we have this demand zone here. So we have some criteria for marking demand zones. I would like us to go through it. The market is still what trending up. So we are in an uptrend. It's consolidating up here a bit, which shows that sellers are getting into control like in the market. So there are a few things we take into consideration when marking demand zones. First thing we need is an impulse, which is this move, this big move. And this big move only happens when institutions enters the market. So we will be looking for this move. The second thing that we'll be looking forward to is a break of structure. So we need a demand zone to break a structure. And here you can see that this demand zone has break this structure. So we have that also here. And three, consolidation. So this is a consolidation. So you want consolidation before that impulsive move. So first is an impulse, second is a break of structure, and third is a consolidation. The fourth thing you need to look for is an imbalance. What is an imbalance? It's commonly called a fair value gap. I call it an imbalance. So this is an imbalance. It's the same idea about fair value gap. The general idea about fair value gaps are they are magnet for price. Okay, they are magnet for price. So the last thing you look for at the demand zone is an efficiency. If I mark a demand zone here, yeah, clearly it's a demand zone. We have the consolidation, a break of structure, the impulsive move, the imbalance is also here. But one thing that you need to look out for is the efficiency. Because without the efficiency, if I can break through this, tap this last demand zone, just put in mind that everybody is looking for a cheap price to buy. So you cannot buy from anywhere and cannot sell from anywhere. In this case, we are buying and we cannot buy from anywhere. We want to buy at a discount price. We want to buy a discount price, and these imbalances are the magnet for what? For price. So if you have a magnet here and a demand zone here, a magnet which is the imbalance or the fair value gap, and a demand zone down here, it's more possible to get an impulsive move down here than an impulsive move up here. A real trend that can break the structure. That's what we're looking for. So I would like to buy at the low and sell at the highs. That's what I would love to do if I have a demand idea or a buy idea. So let's play it forward. Okay, so let's take this zone out and let's read the price for it. So as you can see, price is coming down to our zone. Price is coming down to our zone. So this is our demand zone, and price is actually coming down. So let's wait. So we've got tapped at our demand zone. Let's play price forward and see. Yes. So when I want to enter for a buy or a sell, sincerely, this is what I look for. I wait for the zone to get tapped. I look for a confirmation entry. So this is my confirmation entry. It's just a simple market shift, okay? So let's say in a scenario like this, if I'm buying from demand, this is what I will look for. So we are in a downtrend. So this will be the last lower high, lower low, a break of that structure, okay? A break of that structure will tell me that the market is ready for me to enter. And I will enter from a demand zone, down here, okay? So I'll wait for price to tap the zone and enter for a buy. This is what I do before I enter my trade. So this a confirmation entry that I use to enter my trade. So you can use that too if you want to confirm your trades before you enter. Don't rush into trades. And formal trading is really bad. So let's confirm the trade. Let's confirm the trade. So this is it. Lower low, lower high, a lower low, a break of structure, forming our zone. And this what we'll be looking for, a tap at the last demand zone and a buy upward, okay? A buy to this zone. This is what I'll be looking for before I enter. This is what I'll be looking for. So let's go over the confirmation entry again. This is a break of structure. And this is the demand zone that I was talking about. So if price comes down here and tap me, I'll waiting to sweep this high or take it to the next inefficient supply zone. That's how I enter and I exit my trade. So let's play price forward to see what actually happened. Let me place my 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 entry targets first. So you stop at the lows. So let's see. So we got tapped here. You can clearly see that this is the actual point we got tapped. So we are in, we are in, we are in, and let's see if we can take the high or we can actually reach the zone that we want. So yes, I would have loved exit somewhere here. Sincerely, it's not that I have fear of price not reaching the zone. Price can reach there, but most of the times I look for inefficient supply zone for my demand trades, and I look for inefficient demand zone for my supply trade. So if I were to be taking this trade live, I would have exited or take profits here. So my stop loss will be here, my TP will just be that place. But for the purpose of this video, we can take to the high because that's the actual concept behind it. So let's play the market forward because I can clearly take it to the highs. We can get that from the market, okay? Let's see. Good. So yes, you can see that we've been able to take that high out. So we've been able to take that high out. So you can choose to exit from this zone, okay, which is the inefficient supply zone, okay, which is the inefficient supply zone where price fill the fair value gap there, which is the imbalance there, and tap the supply zone. And you can see that after tapping the supply zone, the market started coming down. So it depends on how you want to wait. We can see that 3 to 6, 1 to 3.63 is not bad. And 1 to 4 is not bad either. 1 to 4.47 is not bad either. So it depends on what you want and how you want to go about the trade. So that's what I have for you today. If you like my video, kindly like, subscribe to return the favor. And there will be a link down below for my Telegram channel. You can join, and I'll be posting the trades that I take daily on the channel. So on the Telegram channel too. So like, subscribe, and share the video. Thank you very much. I will see you in another video. Bye.